So we're here to discuss the quarter gone by and the road ahead with Nitish Mittersain. He is the Joint Managing Director and CEO of Nazara Technologies. Nitish, good to catch up with you. Let's start off with your profits because that has scaled up. What have been the key drivers and how come your revenues are flat?
Sure. So, this is our 14th successive quarter of profits after our IPO. And for us at Nazara, driving growth, but along with profitability has always been very important. As you know, we just don't focus on growth at all costs. This time around, what we have seen is our esports business has done very well. We've seen, strong growth in overall profitability. Our Sportskeeda business has done well with 28% increase in profits. So we have certain engines that are firing well for us. Certain businesses of ours, such as Kiddopia, are still to really take off. But recently, we have acquired 100% stake and control of the company. We have some very good ideas that we hope to implement to grow this business faster in the coming quarters.
Grow the Kiddopia business faster in the coming quarters. I'll come to that, but I wanted to talk about your margins. And you said this, again, you prioritize growth over margins, but you've also gone ahead and said that margins will never be compromised or margins will not come under pressure. But in this quarter, they have contracted quite significantly. So I just want to understand, does this mean that now in the coming quarters, double-digit margins will not be sustained? What's the outlook?
I think we are always trying to get the right balance between profitability and growth. In the current quarter, certain businesses that allowed us to spend more in terms of user acquisition so that we can drive faster growth. And this is profitable spends. This is not spends that are not profitable for us. We've kind of taken that decision. Animal Jam, for example, this quarter we were able to acquire more users, which has driven higher revenue growth. But the margins contracted. I think from a longer term perspective, we should continue to see healthier margins and we should start seeing a faster growth as well.
Okay, fair enough. That's the outlook on the margin picture. And I know this is a small part of the business, but you guys have flagged it off in the investor presentation as well. The new GST regime that has reduced the real money gaming segment profitability. How has it affected your overall net revenue? How do you plan to improve your operating efficiencies within the new GST regime?
Yeah, so if you look at our revenues in Q1 of FY24, we were about let's say 12 crores of revenues in that quarter, which has kind of halved, right? So it's about 5-6 crores. But from an overall perspective, it's a very small contributor to our revenues. So it's not really impacted us much. We've kind of optimized this business now. It's kind of starting to break even and be profitable again. And again, we are hoping that in the coming quarters now with this newfound stability, we will start getting it back to growth.
Okay. And multiple acquisitions that have taken place. Anything that stand out? There was a Paperboat Kids, Paperboat apps for Kiddopia, Fusebox, etc. And what is the opportunity? Because you guys have said that there's Web3, VR, AI, new tech, etc. So what kind of, where are you reining in your next acquisition?
Sure. So most of last year, we spent a lot of time creating a very strong deal pipeline of opportunities we are excited about. And we are very clear about what we want to acquire, at what value we want to acquire, etc. So whatever fits in our framework, we've been very patient about it. But I think this year in FY25, we're actually starting to execute. As you know, we've had, we've been sitting on a large cash reserves of over 1,000 crores. And this year, we're really aiming to deploy most of that in acquiring businesses that we get for good value, that is value accretive to our shareholders, and significantly increase our profitability. We've set a target for ourselves of achieving a INR 300 crore EBITDA in FY27. And I think some of these acquisitions will help us accelerate towards that quickly.
A headline there, target of 300 crore EBITDA, and that's going to be led by acquisitions. Nitish, what about the average revenue per user for Kiddopia? Because that has increased as well to about $6.9.
Yes.
What is the outlook on the attrition of users, on pricing plans, the ARPU, your subscriber growth here?
Yeah, so our overall, KPIs of Kiddopia in this quarter have been pretty healthy. We have seen, a return to average in terms of the churn rate that we have normally seen closer to 6%. And we have also seen an improvement of ARPU in this quarter to $6.92 from $6.89. Our cost of acquisition, the cost per trial that we say, is also slightly improved to $38.6. So overall, I think that the business is stable at this point of time. We have some good ideas, like I was saying, for example, popular IP integration into our game, which should start boosting growth again. And our team is working very actively on same. Now that we own 100% of Kiddopia, I believe we will be able to drive faster growth and faster change going forward.
Adtech, because your gross margins here have improved and largely it's high margin business that has led to this improvement. Is this trajectory going to continue?
Yes, I think the Adtech business generally for us in the last few quarters has been a tough one, although again a small contributor to our overall business. But I think it's in the right direction. We focused on better gross margins, and this will allow us to scale our business. So coming quarters should see continued improvement in margins and top line revenue growth.
To have you on board, Nitish. Thanks so much for joining in and giving us a snapshot of the quarter gone by as well as the long-term vision.
If you like this video, then like, share and subscribe to ET Now.